Hey, welcome back to Overnight Accountants course on Realtors and reducing taxes. We are still, of course, on expenses on Schedule C. In this section, this is part 2 now. I want to make sure you understand this is part 2 of travel, which is line 24A. And as we said earlier, there's line 24A, there's an A there, that probably means there's a B. And B is meals and entertainment, which we will discuss in a later section. Probably actually the next one. However, this is part 2 of the 2 parts for travel. So let's continue where we left off on the previous one, on the previous part of this course, or this section rather, and we're discussing business versus personal days. Now, I want to let you know about a very important concept and a rule in the tax code that could really help you out with some planning, and that is called a sandwich day. Now, a sandwich day is, well, it can be more than one day, but these are days between work days. They will count as a business day if it is cheaper to stay wherever you're at than going home and returning. So this is very important because those days would actually count as business days and be deductible as business days if you can show that it is more expensive, however you travel, to go home and come back than it is to stay in the location where you're at. That's why I want you to be careful, because you must be able to prove the cost of staying versus the travel of going home and back. It is cheaper to stay rather than travel home and back. That's the only way you can count a sandwich day as a business day. So it'll really help when you're doing your 50% rule and all that. So make sure it's really good planning opportunity for you if you have the ability to plan, say, a little mini vacation around a business seminar or something like that. So keep that in mind. Now, if over 50% of the days on your trip are business days, your travel is deductible. If less than 50% of the days of your travel are business days, the trip is not deductible. So, but you can still deduct the direct costs that are related to your business. So let's go over a couple of examples here. Let's look at example 1, and then we'll get in a little more detail about what's deductible and what's not, and how to calculate what's deductible versus over 50%, under 50%. So let's just go through a couple of examples here before we get into that. Okay, let's say example 1. You go to the beach for 5 days and attend a 2-day seminar. So you're there for 5 days, but it's only a 2-day seminar, less than 50%. Only the seminar is deductible. What's that mean is none, 0 of the hotel, travel, or meals are deductible even for the business days. That's why it's so important to at least have over 50% of the time be counted as business days. Now let's look at example 2. You go to a 3-day seminar, 6 hours each day. Now remember, 4 or more counts as a business day. Seminar 6 hours each day at the beach, but you stay for 5 days. Guess what? Seminar is deductible. So is your travel to and from the beach. So your travel is also deductible. Your hotel is deductible for the 3 business days, not the 2 personal days. If those were sandwich days, that'd be different. We'll have that in another example. But your hotel is deductible for the 3 days that count as business days. But it's over 50%, so you get to deduct the travel as well. Also, your meals are deductible for the 3 days that count as business. So I hope that makes sense to you. Now let's go here. Let's look at this example. Example 3, you go to the beach for a 2-day seminar, Thursday and Friday. You stay the weekend at the beach, but you relax. You have some fun. You get in the ocean, do whatever you're going to do. Go out to eat, do whatever you want to. Relax for the weekend. And then you have 6 hours. Remember, you only have to have 4 hours to count as a business day. But on Monday, you can prove that you had meetings that last a total of 6 hours on Monday. Guess what? If staying the weekend was cheaper than traveling home and back, all the days count as business days, and it's all deductible. That's a very good planning tip. It's probably actually worth the price you pay for this entire course. So I want to make sure you understand that. Remember your travel, come back. If you're planning a trip, make sure you come back and watch this part of the course, because you own the course. You bought it. This will help you. Example 4. One more example, I think, is the last one. Okay, on business days. Okay, day 1, you travel 350 miles to a hotel. Day 2, you sit by the pool. You don't conduct any business. Day 3, you attend a seminar. And day 4, you travel 350 miles back home. All the days qualify as business days if day 2 is a sandwich day. So remember, if it's cheaper to stay in the hotel wherever you're at. Remember, you're only 350 miles away, so you would have to prove, and those, because you're traveling over 300 miles, those travel days, remember, qualify as business days too, but you would have to show that that sandwich day, it was cheaper to stay in the hotel wherever you were at than it would be to travel home and back. And that probably shouldn't be that awful difficult to do. So I want to let you know with that. Done with that little section there. Let's talk about what you can deduct. What travel expenses can you deduct on your tax return? Now let's go in here. If it's over 50% of the days are business days, you can deduct the direct cost related to your business, direct business costs. Now that would be like the direct cost of the seminar you attended, or maybe a conference, maybe you had to use the internet at the hotel you were in, you had to charge for that. Phone charges for phone calls in the hotel that are related to your business, so that's direct cost related to the seminar. You can also deduct, if it's over 50% of the days are business days, travel to and from the business location. That would be, your airfare, auto rental, fuel, etc., whatever your travel costs are, taxis, tolls, and other fees. If you use your personal auto, remember you're either going to take actual or standard mileage allowance. Depends on how you do it for your vehicles on your tax return. We discussed that in the early section. Also remember, those reported under car and truck expenses, that personal auto is not included as a travel expense. It's still deductible as a car and truck expense, however. Now the auto rental and everything, that's still travel. So it all depends. It's kind of semantics here about where you got to put it, but we don't want you to get in trouble once you do it right. Okay. Also, if over 50% of the days are business days, 100% of direct business costs are deductible, 100% of travel for you and your business, and that's only for you, 100% travel to and from your business destination. And that's having it only for you because it only applies to you. If you take friends and family with you and they're not related to the business, their costs related to them do not count. And we'll discuss that a little bit more here in a few moments. But also the hotel is deductible on business days only, and 50% of the meals are deductible. If you have a professional doing your taxes, make sure you give them the total. And in the software, it's probably going to want you to enter the total. But remember, that's for business days only. And meals and entertainment, however, are not really a travel expense. Remember 24A, 24B, their report on line 24B, which we're going to discuss in a later section, probably the next section of this course. So make sure you're aware of that. Over 50% of business days, 50% of the business meals are also deductible if you meet with clients. So your personal meals and also the meals if you're meeting with a client. We'll discuss this in a later section. But if you're paying for both of you, 50% will be deductible if it qualifies as a business meal. 50% of qualifying entertainment would also be deductible. So there's really quite a few deductions you can take on a business trip if over 50% of the days qualify as business. Okay, let's see what you can deduct. You can deduct only your costs are deductible, only your airline ticket. That means basically if you take family with you or people unrelated to the business, you cannot deduct their travel costs, as I said a moment ago. Only your meals are deductible. Again, we'll discuss this in a little bit. Only your hotel room is deductible. So what that means is if you get a second room for a family member or somebody else, the cost of that room is not deductible. Also, let's say you get a 2-bedroom in condo for a week's vacation, a week's business trip where you're mixing it with vacation and over 50% of the days are business days. You get a 2-bedroom condo, only the cost of 1-bedroom condo would be deductible. So you may have to prove this. So it's very, very important that you really do some good record keeping to maximize your travel expenses as a deduction. And also remember to ask, what would it cost if you went alone? Anything extra than that is really not deductible. The IRS knows this. The people try to squeeze in as many expenses as they can. We want to make sure you take the legitimate ones and don't get in trouble by taking more than you're really allowed to. But we want you to be able to deduct every dollar you can. Okay, so what if less than 50% of the days are business days? Well, your direct costs are still deductible. That would be your seminar, conference, internet, phone charge, etc. However, your travel is not. So less than 50% business days, sorry, no travel deduction. No meals are not deductible either, generally speaking. However, your business meals and entertainment, yes. So let's say, for example, you go on a trip, it's less than 50% business days, but you still meet with clients and that those meals otherwise qualify as meal entertainment deduction, which we'll discuss later. You can still deduct those, and that's really kind of still a direct business cost. So make sure you're aware of that. Let's move forward here. Let's see. This is very important. If you want to maximize this deduction, you're going to have to be able to prove your business travel. Of course you are. If you're not able to prove it, you're not going to be able to take the deduction. If the IRS looks at it, you're going to be out of luck plus penalties and interest, and we don't want that. This is the key to maximizing the deduction. The planning the trip so it qualifies. Make sure you plan the trip so it qualifies for this deduction. Prove the trip qualified. We'll go over that a little bit. We want you to prove the deductions claim, prove the amount of deduction that you're claiming, and this is the inability to do this. These three things up here, planning the trip so it qualifies, proving it qualified, and then proving the deductions claim. There's the number one reason the deductions are denied, and that is lack of proof. You can go through case by case of tax court and see that is really the primary reason whenever the IRS questions this. The individuals can't prove it. They have an idea what they spent. They can kind of show that it was part for business, but they can't show that they're entitled to deduction. So record keeping is very important. As I said, case after case of that. So let's prove the costs incurred. It means you need to have a receipt. You want to have the dates of travel. You can best claim that with a receipt. You want to have the places you traveled to. You can best prove that again with a receipt. You want to know the business purpose, so you need to be able to prove the days you were there, and you need to document what you did those days to make that day a business day. Notes, now a receipt, okay, I want you to keep a receipt, okay? Now the IRS will say a receipt is not necessary if the non-lodging expense was less than $75 for that day. However, just keep receipts for everything if you can. Use your business account, make sure you do that. Use your business card, just be able to prove better safe than sorry. And you don't want to get yourself near where you start arguing, well, you're allowed $75. I mean, sure, you may be able to, but just keep your receipts. As I just said, keep your receipts and other proof. And we'll discuss it a little bit. Here's some other proof you can keep. I want you to keep your itinerary. So if you have an itinerary that's given you about the business trip, also if you have a class schedule, make sure you have it with the dates on it so you can prove it. Track the time spent on business. So remember, you got to have 4 hours. And if you're meeting with clients, your word doesn't matter. It's up to burden of proof lies with the taxpayer. So make sure you have a calendar, make sure you have receipts, get some witnesses. We'll probably just talk about that a little bit here too. I want you to keep a daily log listing the business purposes of your business activities. Also keep agendas for meetings, keep agendas for your seminars, keep agendas for your conferences. Keep all the marketing materials, at least some of the marketing materials related to it, your entry slip, anything you can to prove. As more evidence is less than better than less, of course. So keep the marketing materials related to seminars and the conferences. If you're getting continuing education, make sure you keep your certificates, which you would need anyways to prove to your regulatory authority, your realtor board or whoever that may be, that you actually got your CEUs, your continuing education, so you can prove the hours spent. They'll have some information on it. Witnesses. Get the names and contact info of business contacts you make, of the people that you went with. If you meet anybody there, you have a business meal, make sure you write down who you ate with and keep their contact information so you can have a witness later if you ever need it. Again, better safe than sorry. Follow up on contact with copies, copies to your business contacts met. Follow up the contact. And what that means is basically send them an email, send them a letter, do something with that. Follow up contact and copy yourself like on an email so you can have it printed out, put it in your envelope. Also, you want a mileage log, as you always would be discussing car and truck expenses, mileage logs for auto use. Again, receipts, receipts, receipts. Can't say it enough. Get it? Okay, if you go with your family or people that are not related to your business, order separately so you can prove your meal. If you really want to maximize the deduction, you got to spend $100 a meal for a family of 4, whatever that may be. You're going to have to parse out that receipt and be able to prove later what was yours. Get a separate receipt. Put that and use your business card for that. Go to dinner. On a business day, pay for your order separately. That's what I'm saying. Remember, if you're paying by day for an auto rental, only the business days are deductible. So you're going to need to make sure you note that on your, whatever your receipt is for your auto, or when you put it into your bookkeeping, make sure you say, okay, it was a 5-day trip, but only 3 of those were business days. Only 3 of those days of that auto rental would be deductible. So this is where you can really get in trouble because we try to hurry and you say, well, there's the auto expense, you give it to your professional, or you just plug it in. Remember, you have to remember later at the end of the year, or the next year even, when you're preparing your tax return, what portion was deductible. Okay, we're finished with that section here. Let's do some notes on travel. So when we get to the notes, we're wrapping this thing up here at some point in the near future. So be reasonable. It's the best note I can give to you. Plan, be reasonable. Conventions can be related to the business, but you need to be able to answer why. And you see here I've related in parentheses because they'll give you a broad stretch of items that you can deduct as long as it's related to your business. You can show there's a business purpose. So let's say if you're a realtor, what about new home designs, trends on urban development, some economic issues related to real estate taxation, things to help you understand how to be a better agent. It may not just be going for CEUs, it could be a wide range of things as long as you can prove that it's related. However, steer clear of political events and entertainment related events. So if your convention is more related to entertainment, or if it's a political convention, that's not deductible. That's not going to qualify as being related to real estate. And you're going to have a hard time showing that, well, it was more about real estate. It could be lobbying is not deductible for you as a realtor. So just be safe, be reasonable, steer clear of political events and items that overtly look like entertainment to take the whole travel. Foreign travel is rare in the industry, and we're really not going to discuss that. So if you're taking a foreign trip, a trip overseas, you're going to be able to prove it, but it does have a different set of rules, and that would really almost be a separate seminar. So definitely get a professional if you're in that situation. Also, beware of seminars on cruises. This is an area where if you're going to do it, please get a professional before you go. Okay, they can be deductible. However, they are fairly dangerous. They are limited to $2,000 per person per year, and you must be able to prove the business purpose of attending that cruise. It has to be a U.S. vessel, and you can only go to, and that vessel can only travel to U.S. and U.S. possession ports of call during the trip. You also have to do a little extra work in order to get this deduction. You're going to need to attach a statement from you regarding the business purpose and the hours in a seminar with a copy of the agenda schedule. You also want to attach a schedule from an officer of the sponsoring organization regarding the business purpose and the hours of your attendance. So not only do you need to attach a statement, you need a third party that's related to that seminar or whatever the sponsoring organization showing that, hey, this qualifies under IRS rules. So be very careful with this. And don't trust the sponsor in many of these cases, because often these cruises are marketed as being deductible. When you get down to the nitty-gritty on it, oftentimes they're not. So make sure you get professional advice before you spend all that money on the cruise. If you want the deduction. Cruises are great. I love them. But if you want to take the deduction, don't try to prove it later. Make sure you know what you need up in front. Make sure it qualifies. Get a professional. Don't just rely on the sponsor or the booking agent, okay? So that's the end of that advice there for you. And that's actually the end of this session. Congratulations. You have completed travel expenditures for Schedule C. Thank you so much, and we'll see you in the next one. I have a feeling it's going to be about meals and entertainment.